Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 8th edition of Market Outlook. Well, quite a strong week this week. Let's get right into it. Just one thought here. Make sure you sign up for the video at www.marketgauge.com and the text news piece, and you'll get this free every week. Okay, first thing is let's take a look at the spiders and see what they did. As you can see, we had a really strong week, well up over 3%, and basically retracing the down move. We had been down at the close of every week this year so far. This is the first week that we basically closed flat, and as you can see, we're sitting right above the declining 50-day moving average. We basically bounced off this sort of triple bottom here and attempting a potential return move to this trend line, which would also be basically a new high. Now, the key thing to watch is the 50-day moving average and the low from 3 days ago, which is sitting right around 204.40 or so. So that's a key number to watch. As you can see, we're not overbought nor oversold, getting a little bit of momentum here to the upside on the longer term Bollinger Band momentum indicator, and that's the picture for now in the S&P. And as you can see, of course, on the weekly charts, that everything, all the trends are overall well intact. Let's take a look at IWM. IWM, after basically consolidation really over a year. Let's take a look at this. You can see going back, we've been trading in this sideways range. It'll be really interesting to see if we can clear the all-time highs. You've got this tremendous amount of compression. You can probably see it a little bit better on the weekly charts. So yeah, this gives you a better perspective overall. Look at this. Really, since October of 2013, we've basically gone into the sideways action and trading basically near the upside of that whole consolidation. So this is a tremendous amount of power. We can get through the highs here. That would equate to, let's see what that price is, 121.70 or so in IWM is a key number to watch. That would take out all this sideways compression. So the 65-week moving average still nicely intact, and this compression is looking very interesting. We do need to clear. Again, not overbought here, so you do have some energy still to continue through to the upside if it so chooses. Of course, taking out the 117 level or so would violate this 50-day moving average, which we've been oscillating around. And again, the real key area that we basically came close to touching late last week and early this week was the 114.50 level. So that's a key level to watch. We close under that, definitely in trouble. Intermediate in the middle there is about the 117.50 level. Let's take a look at spiders. Hold on. No, actually, what I wanted to take a look at, we did look at spiders, is the Qs. Okay, Qs. Oh. Wrong chart. Okay, Qs. We have a very interesting channel here. This has been sort of the weak sister. Some of the leadership is questionable, although we did get some nice moves over the earnings in Amazon, Google, Netflix, Apple. So the fact that it's lagging here is sort of curious. but nonetheless, look at this bottom part of the channel, looking pretty firm against those lows. On the other hand, it's also furthest from the highs. So you can see you've got a pretty nice trend line here. Sort of this wedge is falling. Let's watch the cues. That can be a good tell right away. A move above the highs here, above 104.70 or so, is critical. On the other hand, a breakdown beneath the lows of last Friday is significant because you're now sitting on the 50-day moving average. So this is going to be a pretty good tell here as well. Let's take a look at volatility. Basically, the volatility ratio short-term, 30-day versus 90-day volatility, definitely trending in a positive direction for the market. So that's looking okay as well. Another key thing to look at is the McClellan oscillator, looking at momentum. We're basically slightly positive, so we're certainly not overbought. This is the S&P up here. Again, lots of compression in this zone. This is also sitting basically in the middle, not overbought nor oversold. So in this, this type of scenario, you have room to the upside as well as to the downside, although we're still on a buy signal created late in December, and it's just working its way sideways. Let's take a look at some of the calendar ranges here. If I can get this chart up. Let's see if we can do a refresh here. Okay, so I'm going to put in the spiders here for this. Okay, so this thick green line here is what we call the first 2 weeks of the year, is sort of like an opening range concept. The high here is the green. As you can see, we basically tested within the last 4 or 5 days the low of the critical calendar range, rejected it, traded above it, and it also rejected on Friday the high of the calendar range. So a move above it would be pretty interesting. That would be above the highs of the day of Friday, would really confirm an interesting breakout of the calendar range, which might take you through with enough compression here over the last 2 weeks to at least test the highs and most likely take them out. Now, let's take a look at a couple of other things here. Let's take a look at, let's go back here. Let's take a look at bonds, TLTs. So on the weekly chart, if we go back quite a while here, interesting, we have a channel from the highs that are rejected and sold off sharply. Now the trend is still intact, right? So if you're looking at bonds, long-term trend is still intact. This action here suggests some toppy action and a correction, long overdue correction is underway. Meanwhile, again, rejected at the upper end. If we look at the short-term trading pattern, we're now getting pretty close to, from an overbought scenario to a potential test of the 50-day moving average and the lower Bollinger Band as well. So market definitely under some short-term pressure, but overall, longer-term trend is intact, although you did have a pretty nice size retreat here. Let's see what happens, again, right around that 50-day moving average, which also coincides with the old top, the top just before the market took off for that thrust up. So again, that's sort of an important swing level. That comes in around the 128 level as well. Now you are getting a bit oversold. So again, a little bit more pressure and could be a pretty interesting buy opportunity at or around this 50-day, strongly rising 50-day moving average. Let's take one look at USO, which is oil. Sort of a interesting case here. We had a nice rally off the lows. We had what we call a classic slingshot pattern. So buying this as a potential bottom is in place on weakness or a little bit of strength, and certainly a move back over the 50-day moving average could be tradable. Could be that, although a lot of people are expecting much lower oil prices, that the charts here are telling us otherwise. So potential bottom in place, has to really hold the all-time lows right around the 16 level, just a little bit higher, maybe 1620 or so is the number as the low that really needs to hold. And on the other hand, a move back above the highs of last week and the 50-day moving average could spur an interesting, at a minimum, short-term, short covering rally. So take notice here that on the lows, you definitely had some really good size volume coming into the market. The key reversal day did occur on just about double the normal volume. That is a good indication. So potential bottom in place. On the other hand, if this thing trades beneath 16 again, all bets are off. Okay, that's it for now. Hope this helps. That should be a pretty good overall view of the markets. See you later next week, and happy trading, and bye for now.